Welcome to our program today. Please take a seat, feel comfortable, and please put in the chat where you're joining us from, and we will get started in a minute as people arrive. My name is Miriam Diamond. I'm the program director for the Encore Boston Network, and we help people over 50 make a difference and have more fulfilling lives through work, service, and social action. You can learn a lot more about our organization. EncoreBostonNetwork.org is our website. That's where you signed up. And you can look at other events, but we also have so many other resources there. We have a newsletter, you can join us, and I love telling people it's free. So feel free to do that. This event is being recorded. We're going to send you an email afterwards with the link to the recording. So if there's something you missed, you want to see again, you want to share with other people, you'll have that opportunity. We'll also give you some follow-up resources. If you would like to use the closed captioning, you're welcome to do that if that helps your experience here. Throughout the program, we encourage you to add comments and react and submit questions in the chat. If you have a question, please write question before it so it'll be easier for us to identify. We'll be taking questions at the end, but if it comes to you earlier, feel free to write it and we will be glad to go back and look for it so that you don't have to hold it in your mind for half an hour or whatever. Our topic today is charitable giving, deciding what, where, and how. We want to help you identify legitimate and deserving organizations, how they benefit from it, and other ways that you can donate. So we're going to describe the role of charitable giving from the perspective of the organization receiving the charity. We'll talk to you again about how to verify and determine appropriate recipients, how much one can give, what one can give, tax advantages and other benefits, and how you communicate to others what you would support. So if you have a birthday fundraiser, or maybe when your time is up and you would like people to make donations in your memory, how would they know what's important to you? Our format today is a panel. And as I said at the end, we'll leave plenty of time for your questions. We'll hear from Darcy Brownell from Next Level Social Impact, and she'll give the organizational perspective. Then Glenn Frank, the financial planner, will provide insights on decision making. And they will be hosted by Steve Lewis. Steve is an MBA CPA. He's worked in corporate finance for 40 years. You probably recognize him if you come to many of our programs. He's facilitated a lot of programs through the Encore Boston Network, along with Glenn. Steve also volunteers with Shine, helping people navigate Medicare, and also helps people with tax prep. So I will now turn the program over to Steve.
Thank you, Miriam. Hi, everyone. It's a pleasure to be here, and I'm so glad that you've joined us. As Miriam said, Darcy and Glenn are going to discuss different components of charitable giving. And so a little more background on Darcy. She has a lot of experience as a nonprofit executive, focusing on leading organizations through periods of significant growth and change. She is skilled in helping organizations develop and operationalize strategy, ensure strong financial management, and building high-performing teams. Prior to joining Next Level Social Impact, she was executive director of Social Venture Partners Boston, and previously served as executive director and chief operating officer of Read to a Child and its predecessor organization, Everyone Wins. She has a master's in education from the Harvard Graduate School of Education and a BA in mathematics from Dartmouth College. So with that, I'll turn over to Darcy.
Thank you, Steve, and thanks everyone for joining us. I'm pleased to be here and share a little bit of my insights, and happy to take questions at the end as discussed. I wanted to start, and we can move to the next slide, Kendra, with sharing a little bit of the lay of the land around how nonprofits are funded. So as Steve shared, I started my career running nonprofits. I've now moved over to the philanthropy side, but there's a lot of big data out there. Some of it can be hard to unpack and really understand where your dollars or time or efforts might go. So I wanted to just very first frame things around the types of revenue that nonprofits bring in. I have a couple of slides here from Giving USA, but this one first shows the whole landscape of both philanthropic dollars, the type of giving that we're talking about today, charitable giving, and also non-philanthropic revenue that nonprofits bring in. You can see from this slide that the majority of the revenue that nonprofits bring in aggregate comes from non-philanthropic resources, fees for service, and large government contracts. Fees for service are things like you pay for admission to the museum you go to. That's a fee they're collecting for providing that service to the community versus a foundation grant or an individual contribution they might receive, which would be philanthropic. So this slide implies, I think, that nonprofits don't really need much philanthropic revenue, but that is a bit misleading. One of the most eye-opening data points that I have come across recently is that in Massachusetts, where I'm based, 89% of revenue that comes into nonprofits in our state goes to just the top 1% of nonprofits. So the largest 1% of organizations bring in 89% of the revenue. And that is where the vast majority of this non-philanthropic revenue flows. So non-philanthropic dollars, big government contracts, fees for service, is largely going to these very large organizations. That leaves 99% of nonprofits here in Massachusetts, and similar trends across the country, heavily reliant on philanthropic revenue. So while this data might imply that philanthropic revenue is not key to the success of organizations, it's actually quite important for many of the more community-based organizations in our neighborhoods doing important work in all areas. So if you want to move to the next slide, Kendra. This is another piece from Giving USA, which I seem to have lost the citation, so I'll offer it verbally. So this is just the philanthropic pie, and you can see that individuals play a really important role in the philanthropic dollars that flow to nonprofits. 69% of giving comes from individuals versus things like foundations and corporations and bequests as well. So for small nonprofits in our communities, individual donors are essential to providing the services that organizations so critically provide. So with that context, I want to just offer a few thoughts of how I think about how to select organizations, how to even begin. So if we can move to the next slide, that would be great, Kendra. Thank you. So I have been involved in charitable giving from a philanthropic side in a number of ways, my own personal giving, but also as the executive director at Social Venture Partners, where we vetted local nonprofits. And I also partner with 2 private family foundations on their charitable giving. And what I have found is that it's important to bring a well-rounded view to how you think about who you might support and why. And often or commonly, we can feel that one or more of these is more important than others. So I really wanted to just elevate that it's okay to and important to think about how the head, being smart about your giving and looking at data, but that the heart is equally as important, as well as your hands. And I'm going to go into a bit more about what I mean by these. But many of us might think, oh, how can I possibly know? I must bring an analytical lens to identifying charities. There are 30,000 nonprofits in Massachusetts alone, so it's really hard to navigate and figure out, who's going to have the greatest impact with my dollars. But there are some ways to do that with the head, which we'll get to in a bit. But I want to start in the middle here with the heart. I think, this is why we do this work, and the wanting to give back and contribute to something meaningful to us is really important. And I would just encourage you to not slight that piece of things when you're making your charitable giving the thing that feels most heart driven for you is often the best place to put your dollar. So things that are personally important to you, or a passion that you have, I think is the place to start. And then around that, you can think about the more analytical side of how you might evaluate within that. So on the hands side, I think it's also important to consider the degree to which you would like to have an experience beyond contributing financial dollars. And I know Glenn is going to get into this a little bit as well, but if there are organizations that you volunteer with, they often need your dollars as well. And you've had an experience where you know and can trust the work that's happening. I also think that it can be very helpful to approach it in the opposite direction, where if you're trying to think about where you might want to make charitable donations, and you also have a skill that's important to you or that you might want to give back, say you're in the financial services field, maybe you want to look at organizations providing financial literacy. You both have the skills to better evaluate whether their financial literacy program is effective because you're an expert in that space, but also there might be opportunities for you to bring that expertise to the cause in addition to your dollars. I also think often the hands piece is that there's a park in your neighborhood that's really important to you and they're raising dollars. So thinking about the ways in which you can touch and feel the work that you're doing. That's not important to everyone, but I think is an important element for many. So then onto the head side. How then do we evaluate and bring rigor? You know, you have the passion, you have ways you want to roll up your sleeves. How then do you sort of cull organizations? If we can move to the next slide, Kendra, that would be great. So I'm not going to get into all of these organizations in particular, but there are, I think, ways in which to bring data to the process of evaluating charities. A few of them are here, and I know Glenn's going to touch on them as well. GuideStar and Charity Navigator are ways to research, are these legitimate charities, and a little bit more about their financials. I have found a personal story with doing vetting like this. Recently, my father seems to have found himself on a mailing list where he's getting lots of charitable solicitations in the mail. And because I'm in the field, he asked me for some advice about how to identify organizations. He thought many of them had good causes and was compelled by their marketing messages. And so I was able to guide him to use tools like GuideStar and Charity Navigator to validate these charities. And what he found is that a number of them, not all of them, but a number of them had failing ratings on Charity Navigator. So some of these solicitations that were coming in the mail were from charitable entities, but that spend very little of the dollars they bring in on charitable work. And entities like Charity Navigator and GuideStar can help flag those things for you. So I think that's a really valuable resource, especially when you have incoming solicitations versus identifying organizations yourselves. The other thing I wanted to highlight is that it can take a lot of work to do deep due diligence on organizations and really understand the leadership, the program model, the impact that they're having. But the good news is that there are many organizations out there doing deep due diligence before they provide funding and support to organizations. And so I always like to recommend that you can piggyback on the good work that other organizations are doing. So here in Massachusetts, the Boston Foundation is a great resource. There are also a lot of giving circles. The Philanthropy Connection is one. where they have hundreds of members who collectively spend several months evaluating nonprofit applicants before making their grant choices. Social Innovation Forum is similar. So, if you're feeling overwhelmed and don't know where to start, there are often resources in your community where smart groups of people have already done some vetting, and there's no reason not to leverage that and look for organizations there. There's often people you can call as well for a quick reference of, I'm thinking about giving here. So those are some of my thoughts about how best to take a landscape of 30,000 nonprofits that's just in Massachusetts alone, and identify where you might be able to give your dollars. But keep the heart in mind, bring the head for that final decision-making analysis. But really what's most important is that you feel good about the work that you're supporting.
Okay, thank you very much, Darcy. Really appreciate that. And I find it particularly interesting when you mentioned about the thinking with your head, heart, and hands, and also just some of the resources that's on this slide that may be new to people as far as how to try to navigate, all the organizations one could donate to, like Charity Navigator and GuideStar. That's super. Thank you. The next person I'm going to introduce is Glenn Frank, and as Miriam mentioned, Glenn and I have co-facilitated, co-presented a number of financially oriented topics to Encore Boston Network in the past. And Glenn has a wealth of information. So it's great to have Glenn back here. Glenn was the founding director of the Master of Personal Financial Planning program at Bentley University in 1996, where he taught investment courses until 2015. The Massachusetts Financial Planning Association awarded him Planner of the Year for 2019. He is currently the Director of Education at Lexington Wealth Management, and over the years, he's counseled numerous students and clients at various stages in their lives. And currently, his focus is on community and advisor education, providing an insider's view of the financial services industry, and integrating happiness into the financial planning process. So I'll turn it over to Glenn.
Thank you, Steve. Darcy, you are a wealth of information. I too loved your head, heart, and hands perspective. Perfectly on point. I am honored to present with you and my ongoing, always thoughtful partner in crime, Steve, along with our fearless leader, Doug, and Miriam and Kendra. You are both so talented and dedicated. The largest accolades, of course, go to you all for attending today, for obviously being charitably inclined. Let's all take a little mental break now to refresh, reset just a little bit. Indulge me. Close your eyes for a second. Smile. Take a few deep breaths. Let's take a wide open stance for the next few minutes. This open stance, by the way, reduces your stress. I call this the smiling starfish. There are so many questions related to giving. Family or charity, time or money, now or later, how much, etc., etc. This morning, we will point you towards some answers. We will get you thinking about some new considerations. We hope to initiate a logical process for your giving decisions. Major issues today are maximizing IPD, impact per dollar, and also maximizing your IPH, impact per hour. Let's start with motivation. The most basic question, why give? Now, I do not want to be presumptuous as to what your motivation might be. It's probably pure altruism. I will say there's an added bonus. Giving will probably make you happier. Here's an interesting fact. The same parts of our brains that are stimulated by food and sex are also stimulated when we give. Notice that good feeling the next time you hold the door for a stranger. Notice a sense of community with group giving, such as giving circles that Darcy mentioned, and fundraisers. Our office in Lexington adopts a local family in need at this time each year. Donations in memory of someone can elicit positive feelings as well. I know we don't give primarily to feel good, but it's always nice to get a bonus. Here's a question for you right now. Do you know anyone who is truly deep down happy that is not somehow helping others? Does anyone come to mind? It doesn't have to be helping a charity. It could be helping family, friends, coworkers, clients, customers, patients. Helping others provides us with purpose. Without purpose, you will probably not be happy. You may wonder what's missing. The primary purpose of Encore Boston Network is to help those of us who are playing the back nine with our own encore, with our purpose at this stage in life. Now, purpose is a pretty nebulous concept. You can read the 3 books on purpose by Richard Leiter, who I guess is the king of purpose. Alternatively, you can simply remember Richard's default purpose. At this stage in life, simply grow and give. To have that overall sense of well-being, grow and give. The major question with giving is usually family or charity. This is a very common dilemma. If charity begins at home, where does it end? Just like most decisions in life, the giving decision is a balancing act with our 2 finite resources, time and money, with our infinite desire to maximize family happiness. We have limited time in our schedules, and we may have financial responsibilities to our family. There are only so many dollars in our pockets and so many hours in a day. How should you use these finite resources is the question. Again, it comes down to impact per dollar and impact per hour. What is the optimal amount to give to family, to give to charity? Again, a tough question. Let me make a shameless plug for my book, Your Encore: How to Balance Time, Money, and Joy in Retirement. It's available through Amazon. If you like it, think 5-star. In any case, I provide a step-by-step process for life's time, money, happiness juggling act. The first few steps address your time and money limitations. The final step is multiply your joy through giving. Do you remember the old movie Magnum Force? The character was Dirty Harry, played by Clint Eastwood. At the end of the movie, his big line was, "A man's got to know his limitations." So what are your limitations? First of all, do you have limitations? Obviously, the most precious commodity is time. Probably the #1 cause of failed retirements is poor planning of your schedule. There is often way too much unfulfilling time. Maybe fill the void with volunteering. Maybe fill the void with joining boards. Maybe get a lower paying job with an organization whose mission resonates with your own. As Darcy mentioned, if you spend time with an organization with your head or with your hands, you may be more inclined to donate your money as well. Again, this is what EBN is all about, helping you with what's next. New paid work, networking groups, starting a new business, getting involved in social action, service opportunities, et cetera, et cetera. As Marion mentioned, check out our website, encorebostonnetwork.org. Extensive resources, ongoing events, a lot of cool stuff. Back to time. If you need to free up time for new endeavors, I like to remember the Annie Lamott quote. No is a complete sentence. Then ask yourself, are the yeses in your calendar yours or somebody else's? We all know it isn't easy to say no to people, but saying no can be liberating. Again, to free up time. Second, what are your financial limitations? Kendra, can you give me the first slide here? What's your number? There we go. Okay, let's talk very broadly about your financial limitations. Can you actually afford to give? At what point will it hurt? We all have a number. That's the star in this slide. It's the accumulation amount after saving and working for many years, where work becomes optional. And then you've saved enough money to stop working and still cover your expenses for the 18th and even the 19th hole, if you will. Right now, do you roughly know what your number is? By the way, this number is critical to many other financial decisions, not just giving. We can discuss in more detail during the Q&A if you like, but it's key to know your number. If you have more than this amount, then I guess giving won't hurt you. In theory, you could give all the way down to the amount. But what about your heirs? Will it hurt them if you give too much to charity? That's the tricky part so many people wrestle with. Do you know your heirs' number? Or maybe you believe that it's their challenge to climb their own financial mountain. The most common scenario I've observed over the years is the matriarch and or the patriarch of the family want to make sure their lifestyle is covered. This is very clear part of their plans. What about the residual, if any? Who gets the excess? Again, children, extended family, friends, charity, or the federal and state governments. Here's a client quote that might strike a chord with you. I want my children to have enough money so that they can choose any path they want, but not so much money that they choose nothing at all. There are lots of subtleties to consider here. If your heirs get more than they actually need, where will the excess go and when? Realize it will be their decision, not yours. Another subtlety to consider. Is $1 to charity simply one less dollar for your heirs? It could be $1.50 goes to charity versus only $1 going to your heirs after taxes. Obviously, this is situational, but there could be income tax savings, cap gains avoidance, ultimately estate tax savings from money going to charity. The tax subsidy for your kind donations can be significant. As a consolation to your heirs, you could let them decide which charities will benefit. Again, this is an impact per dollar issue. You have to decide the relative impact. Another major question is the give now or give later issue. Many people will simply give later via their estate when they know they will no longer need the money. Very understandable. Again, consider the impact to the charity and or your heirs are receiving the funds now. Consider your own current happiness in watching your accumulation being put to good use now. At the same time, you don't want to worry about outliving your money. This can be a real conundrum. What is a reasonable cushion above your number to not give away? Let's talk about the tax subsidy now. We have some slides. Kendra, do you want to go to the next one? Okay, sorry, but there is no tax deduction unless you itemize. The above the line $300 per person deduction we had in 2020 and 2021 has not been extended by Congress for 2022. So you have to itemize to actually get a tax subsidy. Okay, I don't know if you know the math or not. You get the greater of your standard deduction or the total amount of Schedule A deductions. which are usually mortgage interest, a limited amount of taxes, plus whatever you give to charity. For example, let's assume you're a single and have interest and taxes that total already more than $12,950. That's the single person standard deduction. If you're already over that level and you make a $1,000 donation to a qualified charity, you would save $220 in taxes. I'm assuming you're in a 22% tax bracket, which is $42,000 of taxable income up to 90 is the 22% bracket. And brackets go as high as 37% if you make a lot of money. Note that even if you do not itemize, you may still enjoy a tax benefit if you donate appreciated property. The benefit is avoiding capital gains tax had you sold the property. Next slide, Kendra. Let's talk about bunching. Thank you. One way to reduce taxes is to bunch a number of years worth of giving into 1 year. In this example, we have a couple who have mortgage interest and taxes of exactly $15,900. Their standard deduction is $25,900. It might be higher if they're over 65. So the first $10,000 they give to charity saves them nothing in taxes, as Schedule A is not high enough to itemize. Now, let's assume that their normal giving pattern is $2,000 per year to 5 charities. So normally they dole out $10,000. So it looks like they will just miss saving taxes year after year. Suppose they decide to bunch. Suppose they tell the charities, look, we're going to give you $6,000 each in 2022, but nothing in 2023 and nothing in 2024. So we get a total of $30,000, still 5 times 6,000. In this case, Schedule A is then $45,900 for 2022, which is $20,000 above the threshold itemized. Their tax savings based on a 22% bracket would be $4,400. 22% bracket, by the way, married filing joint is $83,000 taxable income up until $178,000. And the brackets go all the way up to 37% again. So in my scenario, we saved $4,400. Note that as Steve pointed out to me in preparation for this, some people will time bunching for years that they are in a higher than normal tax bracket. Note that if the $30,000 that we talked about here was appreciated stock, and let's make something up, that the stock was purchased for $5,000, and they'd like to get rid of the stock for whatever reason, they would, had they sold the stock, the taxes would have been $3,750. 15% times 25,000. With this fact pattern, the total tax benefit would have been over $8,000. A very nice tax subsidy. You're only out of pocket $22,000, 30 minus the 8, and the charity has $30,000 for its mission. This is greater IPD, impact per dollar. Donor advised funds. In my example, suppose you do not want to make definitive gifts upfront for the next few years. All you want to do right now is make a contribution, now to avoid taxes, and then decide later on charity. Terrific solution are donor advised funds. Fidelity, Schwab, Vanguard are just a few organizations that offer DAFs. The way it works is you make a donation of appreciated stock or funds. This is irrevocable, by the way. You can't get the money back. The custodian sells the transferred investments and invests the proceeds into the funds you pick from their menu. And their menu will have ESG funds. You then direct the custodian to send specific donations to whichever qualified charities that you wish. There's no time limit as to when these grants need to be made. In fact, you name someone, perhaps your children, to decide which charities will receive any remaining funds once you are gone. There are other benefits. You can be anonymous if you wish. You can give in memory of someone. The custodian will keep track of your giving history. A subtlety to consider. Many people delay making grants, thinking if the money grows, they will be able to give more later. This is true. You will be able to give more dollars later. The question is, what is the difference in impact to the charity of getting the funds now versus later? In many cases, the need may be far greater now. Again, what is the impact? Non-cash documentation. If you make a donation of property, such as old cars, collectibles, whatever, if you are itemizing, these donations are generally deductible at fair market value. This is obviously subjective. It's very important that you understand the documentation requirements. So go to Form 8283 from the IRS if you want to understand how to document these non-cash contributions. A few miscellaneous points. Unfortunately, you cannot deduct the value of your donated time. You can deduct your charitable mileage when volunteering, however. You cannot deduct the value of points or mileage given to charity. It is still a great way to give. Realize that points and miles are not inheritable. When you are gone, so are they. If you're interested, there is a Miles for Migrants program many airlines are involved with. For donation of points, some credit card companies have partnered with various charities. In any case, you can do good without a cash outlay. Next slide. RMDs, QCDs. When you turn 72, you must start withdrawing IRS calculated amounts from your regular IRAs. These are known as required minimum distributions. These amounts are ordinary income you must report each year. Another great way to give is to forego part or all of your RMD. This is known as a QCD, a qualified charitable distribution. There is an annual limit of $100,000 per year, by the way. You can simply direct your custodian who holds your IRA to make a QCD to a qualified charity. This will reduce your ordinary income for that year. Your savings will be a function of whatever tax bracket you happen to be in. You do not have to itemize your tax savings. You may also be reducing your state taxes. So remember QCDs. Getting your heirs involved with charity. I like to think about age-appropriate empathy. If you have grandchildren, here's a gift idea. When our children were young, my wife and I made annual holiday gifts to Heifer International. Heifer as in cow. It happens to be one of Oprah's favorite charities. Our children would pick out an animal to donate to some faraway family. I went online, and today you can buy a milk-providing goat for $120 and honeybees for as little as $30. The benefit to these families far exceed these costs. My employer at the time had a matching program, so basically we could get 2 goats for $120. Or you can upgrade to a $250 water buffalo, where families can plant 4 times as much with the beast than by hand. What a bargain. For a major upgrade, heifer even has a $5,000 ark, which of course is 2 animals of every kind. Talk about impact. Kids feel good, parents feel good. Significantly improve the lives of others, and your children are more likely to be charitable later in life and appreciate what they have more. Seeing others in need, perhaps in high school, community service programs, can obviously be an eye-opening experience. At all ages, I strongly suggest you let your heirs have input, if not final say, when it comes to family charity. A critical issue, I think, is communication of values. Children will probably discern your values by many years of observation. They're watching you. Although actions generally speak louder than words, it is still a very good idea to write down in explanatory fashion your values and who you have given to and why. Whether a simple letter is best or a more formal family mission statement is up to you. Transparency is usually preferable when estate planning, but not always. You know your family. There are many other gifting mechanisms. There are opportunities for partial gifts, where you get the stream of income and the charity gets the principal later. Some examples: pooled income funds, charitable gift annuities, often promoted by your alma mater. People set up their own charitable trusts. These are also partial gifts, sharing income and principal between family and charity. There can be significant tax benefits. Some wealthy families create their own foundations. It is heartwarming that there are so many opportunities to give. Please remember IPD and IPH, your giving impact per dollar and per hour. Per Darcy, you find the charity versus them finding you. And when you need to refresh and reset, don't forget the smiling starfish. Steve, Darcy, is it time for Q&A?
Yeah. Well, first, thanks so much, Glenn. It was really just very engaging, very informative. I think you did a great job of presenting tax information clearly, which is not always easy to do. And for me, I was really most touched by looking at this really in the most holistic way, and really trying to strongly consider living a life of purpose and how that relates to charitable giving. So thank you. So now we have, this is Q&A, and the have 2 or 3 questions. Let me just, I think the first question, maybe more for Darcy, is it says, I want to go local and support organizations in my town, county. Will organizations talk to me if I do not have a donor advisor? So it might be a question for Darcy, maybe for Glenn, I'm not sure.
Go for it, Darcy.
Sure, I'm happy to jump in. I would say, having been the executive director of a locally based nonprofit for many years, I always enjoyed getting calls or messages from prospective donors. So always happy to talk with anyone who was interested in our cause, to be honest. Whether it was about getting involved with your hands and volunteering or making a contribution. Many organizations are structured where they are heavily resourced by many small donations, and those donors are very important to the organization. So regardless of the size and whether you have a donor advised fund or some other formal giving mechanism, organizations are I would say, love those phone calls when a prospective donor, no matter what size, reaches out. It's also a
Super.
great way to get to know and touch and feel the organization and assess whether, it feels like alignment for your interests and values.
Thank you, Darcy. And this question, I think it might be more for Glenn. How and to whom should people, including those without children, communicate what charities they would like listed for donations to be made in their memory when the time comes? Because often obituaries may be published before wills are read. So how can someone make it known when they pass away? How can they communicate? And so it'll be acted upon for where they like monies to be donated to in their memory.
Yeah, great question. Anybody can chime in on this one. Just some thoughts are certainly, it's how you plan your estate is up to you. So, I've seen people, they'll have detailed, and they let the funeral home know things, and the funeral home can publish things, of course, in addition to the obituary. Certainly, whoever your executor might be, they should really very much be in the loop. I think these things, values, minimizing family discord, I think they're far more important than estate tax savings and that kind of thing. So communicating with your executor is very critical. Whoever the most trustworthy person, most sensitive person in your family really should know. And things in writing, things get really misconstrued by very convenient memories. I think it's incredible to put things into writing, and somehow whatever that document is, as I mentioned, either it's a family mission statement or a simple letter, I think that needs to be circulated as widely as you think appropriate. So other comments, folks, beyond that?
Yeah, there's some other questions, and this one is more, I think for you, Glenn, tax related. Interesting question. Can you say more about giving part of your required minimum distribution from an IRA directly to charity rather than the full amount? So if the required minimum is 100,000, you'd like to give 50,000 to charity. How can you do any thoughts there?
Yeah, great question. So yeah, you can split up as you want, as long as you don't go over 100,000. So you just contact your custodian. I've got a lot of clients. They'll have a couple thousand here, a couple thousand there, and they have dozens of different charities that get their parts of their required minimum distribution. So you just notify the custodian, and the custodian sends it out, and then you get a reporting from the IRS as to which amounts went charity, which ones did not. So yeah, it's just a thing you work out with your custodian. But yeah, it doesn't have to be. Whatever you don't send to charity, you'll end up paying taxes on.
Okay, thank you. Thanks, Glenn. Another question, I think this is more for Darcy, and I think Darcy may have touched on this, but maybe to elaborate, says, many of us know about large organizations whose work is well publicized. And you talked about so much of the donations go, I think of the non-philanthropic go to large organizations. Can you recommend a way to find related, more local or smaller organizations who might need my donation more than the well-funded national or international? So I don't know if there's anything like elaborate on what you shared earlier.
Sure, absolutely. I think first, there's an important role that large organizations play. So don't feel badly about giving to the household names, certainly. But many organizations have local chapters, and you can be more directive in how you want your giving to go. So for example, there's Big Brothers, Big Sisters of America, I think based in Atlanta, but there are several Big Brothers, Big Sisters outfits here locally in Massachusetts and likely in other communities that people are in. So you can, even within a large organization, you can direct the resources to kids in your own backyard or other things happening more locally within those umbrellas. But beyond that, I think some of the resources I talked about with local entities like your local community foundation or other giving circles locally are often supporting the organizations that are more locally based, and you can piggyback on their efforts to identify who's doing what. There's also every day new search tools that are popping up. There's a new initiative that was just released from it's a web platform called Impala, which is a way to search local organizations. And I think, there's also friends and family that are involved with organizations to rely on. But I would start with a community-based organization like your local community foundation as a good place to start. They often will have their portfolios organized by arts and culture, climate, education, so you can sort of plug in and find what you're looking for there.
Thank you. Thank you very much. Another question, and this is, I think, more for Glenn. Interesting tax-related question. Can a QCD go to a donor-advised fund?
No. Pretty sure it has to go directly to a charity. See, that's the thing with the QCD. You can't delay your decision. It's got to go to a specific charity now.
Yeah, and again, this is a QCD coming from IRA or other retirement.
Yeah, so
funds.
I don't think you funnel through the donor advised fund and just wait forever to give it out. I think I don't think you can do that.
I believe you're right. Yeah, I believe you're right. Yeah. Now, and this is a question, I'm not sure, it's more estate planning, so it might be more for Glenn. I'm not sure, your thoughts about this. How does one choose an executor if there is no obvious choice?
Yeah, that gets tricky.
It's more estate planning. It's a little tricky, but
I like to have somebody who's knows you, is close enough to you, but doesn't have a conflict of interest, isn't likely to be a beneficiary. And they don't have to have financial savvy, but they should be encouraged to have a resource person who does have the financial savvy. So you kind of mix the best of both worlds. Somebody outside with financial savvy with somebody who actually knows you and what matters. Tricky question. Many times there's this cousin or somebody who has their own money, so you don't have to worry about the conflict of interest kind of thing. Yeah, but it's a struggle to come up with the right executor. And if it's within your family, you don't want any of the children to be slighted here. Oh, mom picked you as the executor, what about me? And a lot of times people default to whoever's the oldest or whatever. I had a client last week and she decided to go with the daughter who's younger, but she's local and she has a finance background. So all this stuff, again, it's minimizing family discord later. How people will think about whatever is crucial. And this sticks with them for many, many years. So yeah, very sensitive topic. And things like, I'm going to digress a little bit, life insurance policies. If mom and dad die, who's going to cover the kids? Don't tell anybody other than the people you ask. I think if you want family discord, you can trust me with your kids. And the likelihood of both parents dying and the child not dying, I don't want to get too morbid, is pretty slim. The likelihood of family discord because you didn't pick somebody is really quite high. So always the practical implications within the family are really crucial.
Yeah, the only other thing I would add is when I've talked with people about this, about choosing an executor, it's a very important decision is, someone you can just truly 100% trust. It sounds maybe trite or obvious, when you hear it conceptually, but it really is important. I'll just ask maybe one other question, then I think we just, and then just want to make sure that we finish on time to respect people's time. Can you say more about giving things like airline miles? How does that work? I think you talked about miles for migrants, Glenn, and anything you want to elaborate there, which, is a little different than giving money.
Well, one of the beauties of teaching in these events is you end up boning up on topics. And so over the weekend, I thought I'd research that because Marion had mentioned it. And all I did, I found, and you guys can Google as well, but there's this Migrants for Miles program. And my general understanding is they've probably helped 40, 50,000 migrants who really had financial needs being able to travel. So I think the vast majority of the airlines are involved in this program. but basically you're just going to have to Google it online and check it out. But it's a really nice thing to do. And again, maybe you're never going to use the miles anyway. I don't know.
Okay, super. Thanks so much. Yeah, go on, Darcy.
I was just going to also add that I've received donations like that, and it does sometimes vary by airline. And some airlines do offer the option where for a much reduced amount, they will turn it into a cash contribution to the charity. So you might be able to direct a portion to your charity directly as well.
Cool. Cool.
Super. Well, Darcy, Glenn, thanks so much. This was very informative and also very broad as far as really trying to look at charity in a very broad way as far as your time, your energy, volunteering, and different ways to donate financially. So thanks so much. And I'll turn it back to Miriam to wrap up, and I think she'll talk some other things about what's going to be sent after after today, as far as what materials you'll get and what's on the website.
Great. Well, thank you, Steve. And thank you also, Glenn and Darcy, for your words of wisdom. There's so much to think about, and you helped demystify some of this for us. So I appreciate it. I also want to thank Kendra, our administrative coordinator and technology expert and slide creator, who has been making this all possible today. I encourage the rest of you to please let us know in the chat what kind of action you will take. Is there some new insight you got, something you'll do next? How did this webinar affect you? And we'd love to know some suggestions for future programs and any other comments you have. This session has been recorded, and we will email you the link within a week with a lot of the resources that were mentioned today. So you can share it, you can listen to it again, you can always use it and refer to it. And we'll also include direct contact information for today's presenters. So please take a look at the Encore Boston Network website. We have a lot of other resources that you'll find valuable, and we have a number of upcoming events that you want to know about. Please feel free to join us as well. Some of our upcoming events include networking, and networking can be for jobs, but there are many other things you can network for as well, and we'll talk about that. Understanding pre-employment assessments. If you're job hunting, you might be asked to take an online test. What does that mean? What's that about? Why are people doing that? Will that help me or count against me? So we're going to discuss that. And we'll also talk about succeeding in the multi-generational workplace. 5 generations are working now together. How do we manage that? So it should be a very interesting conversation. Again, I want to thank you all for joining today, and I want to wish you a wonderful day.